Hello, and welcome to Markets in Focus. My name is Joe Bell, and I'm going to discuss some of the most interesting financial market themes that I'm observing. So 2023 is obviously in the books, but as we look back, money market flows surged in 2023 as interest rates reached multi-year highs. Also, inflation continually heading lower over the past year and a half. Shelter rental prices remain the largest driver of above average US inflation. And finally, Red Sea transit for shipping between Africa and the Arabian Peninsula. Ship transits through the Suez Canal have plummeted sharply during the past month due to conflicts. So money market flows in 2023, we have a chart here, cumulative inflows to money market funds by year in billions of dollars, going all the way back to 2007, all the way to the previous year of 2023. And you can see a couple lines here jump off the chart. We see 2020 jump significantly at its peak was north of $1.2 trillion, but 2023 is going to come in just north of $1.3 trillion of inflows during last year. That surpasses the previous record. If you remember 2020, obviously the heart of the pandemic, there was a combination of interest rates going higher and a real flight to safety during that economic and government shutdown. 2023, not as much concern or a flight to safety, but we did see interest rates surge to their highest level in multiple years. And people surveyed the market, 5% interest rate, risk-free. That was very attractive for those. But interesting to note, equities and fixed income by the end of the year, especially buoyed by that strong fourth quarter in November and December, outperformed money market and cash despite all the inflows. It will be interesting if some of those flows go back to the stock market in 2024. Now, CPI continues to move lower. In December, we saw a little bit of a higher than expected, but it is just north of 3% for the CPI. But let's take a look at the components of what's driving it. We have 5 different areas here: food, energy, core goods, shelter, and other services. Shelter ends up being the majority of the overall services component, and a lot of it's driven by rental prices. You can see there, food, energy, core goods, especially core goods and energy were big drivers of inflation during 2021. You saw food jump up in the middle of 2022 as the Ukraine-Russian war began to really continue to pick up its pace. But during the past year in 2023, we saw food prices come down significantly, or food inflation rather come down significantly. Energy becoming actually a negative, a detractor from inflation for most of 2023. But shelter remains the biggest driver. When you look at more alternative timely data sources, whether it be home prices that tend to lead rental prices, or Zillow average rental prices nationally across the US, those have already rolled over. I would expect the shelter component to continue to decline during 2024 as it typically lags some of those more timely components that have already significantly rolled over the past 12 months. Now, big news for multiple reasons. The Suez Canal, for those of you that aren't familiar with this, this is an area of the world between Africa and the Arabian Peninsula. It's called the Red Sea, and it's basically a long waterway, a long canal that connects sort of Asia to Western Europe, or the eastern parts of Africa and the Middle East up through Egypt, and then over to Western Europe, and obviously over the US. So it's a huge transit. Why is it important? About 15% of the world's trade, if you look at consumer products overall, it might be closer to 30% of that trade comes through ships through that canal. We have seen transit trade volume plummet. This is a 7-day average graph of just south of 3.3 million tons. Currently, you can see that's the lowest level since back in 2021. If you remember, there was a ship called the Ever Given that actually was blocking, so we had traffic down to basically zero at that time. But you're seeing traffic plummet because Houthi rebels, right? This is an Iranian militant-backed group in response to the Israel-Gaza conflict, right? The Israel-Hamas conflict in Gaza is starting to put missiles and shoot missiles, not just at US, but any sort of ships that are going in there. US and Great Britain have started to target some of these Houthi rebel militant areas in Yemen. Okay, but this conflict has been going on for several weeks. We've seen traffic plummet here. This could be, we talked about some of the things that caused inflation to pop back up in 2022, and many people expected it to go down. Things like this, these wild cards, these conflicts, as they pile up on each other, this is something to watch. We've seen traffic go lower. The longer this lasts, we're going to see shipping costs go up. We're already seeing that now for shipping containers and costs going through that. The longer this lasts and the longer this slows, it is definitely going to have an economic impact for certain industries. We could see prices in certain pockets related to those canals, or even have shipping containers having to go longer routes that could cost more. This is sort of the latest conflict and something to watch if you're looking for reasons why inflation might not be headed directly for 2% in the direction that it's been heading. So Lexington, Kentucky, right? A professor with the local travel organization with approval from federal agencies joined together and beamed what it's called sort of an interstellar travel ad into space, inviting aliens to visit the city, including bitmap images of the city of rolling hills and horses, but also molecules of bourbon. So a bit of a publicity stunt for this city of Lexington here for us Earthlings, but also they said they shot it out into a what they believe is a star that could have planets. Bad news is that star, it looks like it's about 40 light years away. So I am probably not going to be here by the time we hear back from them. So good luck to them. We'll see what it does for Lexington tourism. With that, I want to thank everyone for watching, and we'll see you next time.